Hi everyone, Jono here from Capital Edge. Today I'm going to have a chat about guarantor loans, which a lot of people ask me about. I've discussed in previous videos how easy it is to actually hold an investment property with the cost side of things, but the hardest thing a lot of people find is having the actual deposit. And a guarantor loan is a really good way of working your way through this and helping most likely your child, but it also could be helping a sibling, it could be helping someone else in the family. So the way that a guarantor loan works is basically a person with equity in their property will use this to guarantor your loan. Now the fear that a lot of people have in being a guarantor is their mortgage is in fact going to go up by, say, in this example, the $120,000 we need to buy an investment property or your own home. Now it's actually the opposite to this, and the good news is, as being guarantor, you don't actually have to give the person any actual money. So we'll work through how this works now. If the guarantor, so let's just say this is your parents' house for ease of explanation, is worth $800,000 at valuation with the bank, they have a mortgage of $200,000, they have significant equity in there that they can use as guarantor to facilitate the purchase of an investment property for the child, or in fact the child's first home. Now, what you normally need is a 20% deposit on this purchase, which would be $100,000, plus your costs, which are your stamp duty, your interest during construction, and your legal costs of, say, another $20,000 approximately. So in order to get into this property, the child needs $120,000. Now, what the guarantor is doing is using their own home as guarantor for this loan, but the child will end up borrowing, in fact, 104%. So they borrow the in total purchase price plus the costs, which gets them into the property market. Then it's up to them to utilize your rent and your tax deductions to hold this property. And we've discussed before how it is very economical or very cheap, often only $40, $50 a week to hold their investment property or their first home. And the beauty of this model is that the guarantor stays with their mortgage at $200,000. So provided there's no issue, and I can go through this when we catch up in person, but no issue with the actual person holding the loan, then the guarantor is completely safe. Their mortgage has stayed at $200,000 and they've helped facilitate their child or their loved one into the property market. This is a really exciting and a really good way to help people get into the property market. I've helped many clients with guarantor loans, and at the moment, touch wood, there has never been a single issue. Please check out my website, give me a call on the 1300 number, or alternatively flick me an email, and we'd love to hear from you, and I'm happy to run through this in more detail whenever it suits you. Bye. Cheers.